finance team at Uber, just to give you an overview of what it is like what's the finance team in a company, really, not just at Uber, but any tech company or more broadly, any big corporation. So the CFO, the Chief Financial Officer, leads the finance organization and reports directly to the CEO. It's a very important role because the CFO is the one who talks to investors, talks to bank analysts. He's the one who talks during, he or she, in our case it's he, talks to during the investor presentations, the earnings calls. So it's a really important role. And underneath the CFO, there are a number of different teams within finance. I just highlighted some of them here. Starting from the left, strategic finance. In some companies, they also call it FP&A or financial planning and analysis. But here at Uber and mostly in tech, everybody calls it strategic finance. I am part of this team. And what we do is a bunch of different things. There is the more traditional FP&A piece, which is basically the planning, so the forecasting. We forecast revenue growth for the company, like how much is going to be revenue in 2025, in 2026, what are expenses going to be, and what is our profitability going to be. So we do that, and that's really important because we communicate those projections externally to investors, and then based on that, investors will decide if they want to buy or sell the stock. So that's really important. But we are also very close to the daily operations of the company. So in a company like Uber, we operate in the cities every single day. There are like millions of transactions, millions of trips every day. And we do a lot of business analytics to identify what's going on, how our customers are using the products, anything that looks like it's not working well. For example, if in a city we see that there is not enough drivers, we try to identify those trends quickly so that we can try to adjust, maybe by giving some bonuses to drivers to sign in or to come back on board and take more trips. So we do a lot of analytics. So earlier we were talking about why I started that master in data science. The reason is we do a lot of analytics in finance at Uber, and not everybody knows like programming or like SQL, but if you know how to use it, it's a very powerful tool within finance. And then lastly, we help the business hit financial targets. So the people that run the business are at Uber, the operations team. The operations team reports to the general manager, and the general manager reports to the chief operating officer. And they are the ones that every day they decide what the pricing should be. For example, on UberX in San Francisco, should we deploy more incentives to drivers and stuff like that? And we are their advisor, their financial advisor, their kind of numbers advisors. So that's a really important role that we have. Moving on to investor relations. Investor relations is the team that together with the CFO owns the relationship with investors and bank analysts. So they basically tell the story of the company. They talk to us in strategic finance and to other teams. They try to understand what's going on in the business, and then they report those facts externally to make sure that the investors know what's the future of the company. And hopefully they like the story and they buy the stock. Corporate development is a very small team. They're basically M&A, like internal M&A for the company. They look at potential targets. Like in the past, Uber has done a lot of acquisitions. One of them is Postmates. Has anyone ever heard about Postmates? Okay, a few. So that's how I came on board. I joined Uber. I was at Postmates, and then Uber acquired Postmates. So that's how I landed here. And then accounting, tax, internal audit. These are also really important teams, but they look at kind of like different parts of finance. So accounting looks at what happened in previous months. They do the books and they make sure that we are reporting all transactions correctly. Tax, they make sure we are paying the right amount of taxes in all our jurisdictions. We operate in 70 countries, so it's a really complex tax and legal entity structure, and they try to optimize it. And then internal audit is like an auditor. Imagine like PwC, but internal. So they just make sure that the company has the right processes in place. We're not doing anything wrong. And they try to catch it early if there is any risk, so that our external auditors don't need to catch that, and it doesn't become a big problem. So that's high level what's within finance. I wanted to give you an overview of my career so far. So I'm from Italy. I studied in Italy. I did my bachelor's degree in Rome, at LUIS, and then I did a 2-year master's program at Bocconi in Milan. So I studied finance, and Bocconi is pretty well known in Europe, but not super well known in the US. So not many people know about Bocconi here. And I also did a study abroad in Australia, which was also an amazing experience. But that's for my study career. And then moving on to my professional career, I started in Milan. So after graduation, I started working in HSBC in FX, sales and trading. Pretty interesting job where it's very dynamic during the day, but then it's almost like owning a shop where you open the morning, they close at night, and then start over the next day. There's not a lot of like long-term projects that you work on. And so after about 2 years, I tried this experience at Amazon in Milan. So at the time, it was 2017 when I joined Amazon, and it was still fairly new in Milan, despite being a huge company. So everybody was super young. It was very exciting. I was in the electronics division, specifically camera, so like photo cameras, which was already a declining business. So it would have been depressing everywhere, but at Amazon, it was still growing just because online sales were growing so much. So it was fun. It was a lot of fun, very dynamic. I only spent less than a year there because after that, I moved to the United States. I moved to San Francisco. And so I started working at JP Morgan in corporate banking. So you can see that I try to show here that there is not a lot of the moves don't make sense. They don't follow a clear trajectory. And the reason is I try to experiment. Early in my career, I tried to experiment many different things because I didn't really know what I liked. So when I joined JP Morgan, I was in corporate banking, which big banks have two main divisions, investment bank and corporate bank. So investment bank is like M&A, trading, debt capital markets, stuff like that. Very intense, very long working hours. And then corporate bank is still somewhat long hours, but more reasonable. And you do other types of banking products like debt, you do investments, you do even bank accounts, stuff like that for big companies. And so my clients were all technology companies here in the Bay Area, mid-sized technology companies. So that's how I got really excited about technology. And after a couple of years, I decided I wanted to try working in a technology company. So I moved to Postmates, which at the time, that was 2019. It was pretty small, like 1,000 people, private company, food delivery, growing, but small player in the US. It was maybe like 10% of the market share. But then something huge happened that changed food delivery. Does anyone know? Exactly. COVID, unfortunately, but also fortunately for Postmates. So in early 2020, everybody was home and the food delivery business literally exploded. So Postmates started growing like crazy. Uber Eats started growing like crazy, DoorDash. There was a lot of excitement about that space. And in 2021, Postmates was acquired by Uber. So, yeah. Yeah, peak. It was, peak valuation because there was, so for two reasons, I believe. First of all, food delivery was growing like crazy at rates that obviously were going to slow down after COVID. But then the second reason that it's not specific to food delivery is just like the market in general. There was so much liquidity, just in general, that every valuation was just inflated. So it was a great time to sell. And yeah, so that's, they did the owner is a German guy, probably made a lot of money. And so now I'm at Uber. I joined Uber in 2021, and I've been in two roles. Well, I didn't say that at Postmates I was in treasury, which is the team that basically owns the liquidity, investor relations. That when you are in a small company like Postmates, you do a bunch of different things. Then when I moved up Uber, I was still in treasury, but much bigger team. So I was just in charge of foreign exchange and short-term investments. So before I move on to strategic finance, I want to say that you can see that there is not a lot of linearity, but there are some patterns. Like, for example, I work in treasury here, where I was in charge of like liquidity and stuff like that, which is something I learned JP Morgan. And then when I moved to Uber, I was in treasury in FX and investments. I've done FX back here at HSBC. So I think that when you change jobs, sometimes it seems like you're not building up on top of your previous experience, but you will see that sometimes the skills that you learn will still be useful in another experience, even though it seems like completely different. Okay, now after treasury, about 3 years ago, I moved to strategic finance, which is the team that I highlighted earlier. So now I work in the mobility division, and I basically oversee finance for consumer and products. What does that mean? We try to grow consumer engagement. So we want people to take more trips with Uber, and we want to also grow products that are other than UberX. So UberX is our key product, the biggest product. We want to grow more premium products because they have better margin, higher price. But also we want to grow lower cost products because generally there is more engagement, more frequency. So yeah, that's basically what I do. It's pretty cool because there is a lot of change still. There is a lot of growth, but also self-driving. Some of you are interested in self-driving, and that's a big area in mobility in general. Uber has a bunch of partnerships with some of the companies like Waymo, Wave, AV Ride, and a bunch of others. So it's an exciting space. There is a lot of growth. Go ahead.
I would have a question. So before you moved to Postmates, it was pre-COVID. So I would say going from JP Morgan to such a small company, what was the driver to do that such a choice? Because Postmates was acquired after COVID and it became something bigger.
Yeah.
JP Morgan is a huge company. So what was the driver, and where did you get also the courage maybe to do such a move?
Yeah. So sometimes some moves seem irrational, and it was a bit irrational. But I think looking back at the time, it was a very exciting time for tech. 2019, those years were super exciting. There was just so much optimism that every small company seemed to like take off. And so I think my younger mind just thought that it was gonna be great and it was gonna become like a big company. I had never used Postmates, so I never used food delivery. I was not a big believer in the food delivery space. I just wanted to try a small company because in my mind, when you are in a small company, and I think this is true, you get to learn much more because you get to do a lot more stuff. It's less hierarchical. And so I just wanted to get that experience. And I knew that there were so many other opportunities around me in the Bay Area that if things didn't work out at Postmates, I could have gone somewhere else. But I also knew that I didn't want to stay in banking. And so that's why I decided to go to tech.
What do you think about the impact of Waymo on this kind of taxi services here in San Francisco? Is that something that is, I mean, it's great to have Waymo because you have something, you have a target that you need to reach, or is something that is managing a lot of the Uber job here?
So Waymo is very, very, very exciting technology. You guys have seen that they are everywhere here in San Francisco, and they are probably the #1 player right now in terms of like self-driving in the US. In San Francisco, they don't have a partnership with Uber, so they are just on their own app. But in other cities in the US, they are on the Uber platform. So let's say, for example, Austin. If you go to Austin, you can only book a Waymo through Uber. So the strategy for Uber is we want to build the partnerships with Waymo and others so that Uber is still going to be the aggregator. And we don't want them to go on their own app, obviously, because otherwise they would skip they would skip Uber. It's still very uncertain, but it seems like if as more players like Waymo reach the self-driving technology, like level 4, level 5 as self-driving, it's going to be just obvious that they need Uber. No consumer will want to download 10 apps, right? So they will still want to be on a platform like Uber that brings everybody together. And I would recommend, if you're interested in this, you go on the Uber Investor Relations website. There is a really informative presentation that was published during the previous earnings call in February that explains why, in the mind of the CEO, our CEO, Uber still has a role in a autonomous future because of how we can manage demand and supply in periods of peak demand, like New Year's Eve, and in periods of like very low demand, like a random Tuesday night at 3 a.m., which is something that self-driving cars cannot do because they have a very fixed fleet that doesn't scale up and down. We can do that because we have independent contractors as drivers. Yeah, go ahead.
Yeah, my question was a little bit off this topic. It was more in the sense of how was it to be in the middle of a company being acquired? Like you move to a company, start working for them, and then suddenly like there's a big fish journey. And
Yeah. So we were preparing for IPO when I was at Postmates. We were gonna go public. We already had a ticker. It was Mate. So we were working on that. And then I was not part of the M&A deal team. It was probably like the CEO and a few other people. But all of a sudden, around July 2020, we got an email saying, hey, we just got acquired by Uber. And then providing some reassurance and stuff like that. So everybody initially was not very excited because Uber, still at the time, had not a very positive reputation following some scandals that happened in 2017. And so many employees were not very excited, but thinking back, I think it was the best outcome. Postmates, like I said, was a small player, like 10% of the market share. Hey, Daniel, I'm just wrapping up here. And so being bought by the larger company with a lot more money and more funding was probably the better outcome for a smaller company like Postmates.
Okay, so my question is also on the topic of Waymo. So you said that in other places like Austin, Waymo is on the Uber app, but here it's on 2 different apps. So I would expect that you guys and Waymo are competitors here, right? So what do you guys do do you guys just try to undercut prices, or what's the strategic plan for just San Francisco right now? Because this is where there's a ton of Waymos here.
Yeah, so right now we don't have a partnership in San Francisco. There are teams that look at pricing and they try to be competitive in the market. Ideally, the long-term strategy is that Waymo will see the value that we provide in cities like Austin, and they will decide, okay, it makes more sense for us as Waymo to operate through the Uber platform rather than have our own Waymo One app. So that's the goal, hopefully, like a bit longer-term goal.
I think usually finance technology is somewhat isolated in most countries, right, on the product. With Uber, they're very interlinked, right? So is there a case of that you look at each market on a daily basis to see what products or what services are working, and then if you have like sprints, for example, and then you see if we can improve that, or like how are you trying to like decide on like features and how the pricing works, right? How the pricing mechanism works? Is that like you guys use algorithms, or I'll just like to know more about that.
Yeah. So pricing is very complex at Uber. There are some pricing components that are more like based on time, distance, and then there are other components that are based on live market conditions, like how many drivers there are, is it raining, is it sunny, is there an event, stuff like that. So finance works really close with operations. You can think about it this way, I would say. The daily management of the business is owned by operations and finance. And then if you zoom out a little bit and look a little bit more long term, I think product ops, probably Daniel, maybe you can confirm, comes in and they think about the longer term strategy for a product. And if they if we realize we are missing a product, for example, a low cost product, and we realize that a lot of our customers need it, then they will think about how can we create a lower cost product and what should the characteristics be.
So you guys have like, in terms of the pricing mechanism, right? Is it like you use like a standard formula for each market? Is it just kind of tailored to each market, each time of the year? And you mentioned different conditions, right? Like that's kind of what it hits certain kind of exceptional criteria, and then it will create a price, right? Is that what you do?
Yeah, it's very local. So each country has its own management team, and they decide how they want to tweak pricing, depending on the market conditions of the country, the competitive forces. So if there is very fierce competitor, we may adopt a strategy. If we are like number one with 90% market share, we're going to adopt a different strategy. If we need to hit a certain profitability target, maybe we will increase pricing just temporarily to hit that. So it's really flexible.
Yeah, I guess just adding to that, I think obviously Uber, there's lots and lots of people with Uber and lots of people in product, lots of people in data science, lots of people in engineering who look at that specific problem. So they would look at it and they think from a data science perspective, a modeling perspective, they'd look at it and see, okay, what is the objective function that we're trying to maximize for? And based on that, then there would be certain tweaks in the modeling to be like, okay, like maybe we'll go a little bit more aggressive on pricing, a little bit like maybe if it's more competitive, maybe we'll be like, we'll do something slightly different. So that's one layer of the pricing. And then there's also incentives. So operations also activates or leverages incentives. So I came from an ops background as well. And part of it is also looking at like work-life teams. Okay, maybe there's like an event at Chase Center, for example. That's like one of the big places over here. There's a concert, there's like an NBA game, something like that. They would look at it and be like, okay, maybe we need to put more people here. And then hence they would start thinking, okay, maybe we add some incentives on top of what the modeling already would be showing. That's another part of it. And then also you look into it like, what are the destination pairs and the pickup and destination pairs, right? You think about, is this a place where you're going to be getting a lot more people that are interested in coming to pick up a rider in that location? And then what about where they're dropping them off? Is that where they're dropping them off? Is that a place that actually is going to be reasonably good for them to get another ride as a driver? Or is it actually going to be very far and hence maybe it's less attractive and hence they need to increase the cost? But again, there are lots of different teams looking at this and I'm definitely not in the team that looks at it. But yeah, I think it's very, very like multi-layered and very different teams look at it for different reasons.
Thank you.